Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
If there's a currency pair, like, for example, let's say the U.S. dollar and the British pound, not in the last month because the pound's very, very weak against the dollar, but a couple of months ago, there wasn't really that much of a clear fundamental edge between these two, was there? Both of them were sort of equally weak against each other, so it's a matter of finding that either yield differential that's going to give a certain currency an edge, like in a lot of the carry trade currency pairs until recently, before the carry trade also broke down a few weeks ago. For example, the Australian dollar, huge yield differential between the Aussie and the Japanese yen, for example. There was a clear fundamental edge there and very clear, strongly defined technical trends that could have a trader could have established if he were to take a look at charts as well. So I look at both of these factors, fundamentals and technical developments. I pay very close attention to price action as well. You're probably familiar with my quarters theory, which is a great way to sort of understand how the prices and the exchange rates, actually fluctuations in exchange rates behave, and what these currency pairs do. So those are some of the factors that I look at.
Ilian, for those of us that have not, I have, but some of the attendees today didn't listen to the last time you were on about your quarters theory. I've traded stocks, equities for many, many years, and I used to always have this theory that, you know, when a certain equity got to a round number like 50 or 100, it would sort of be a magnet for prices. And I think that's sort of the way you look at the foreign exchange market. Do you mind describing it?
Yeah, absolutely. Very shortly, because I don't want to go with too many details here in the next couple of hours about it. But I pretty much look at certain very important numbers that are important numbers in math as well. You know, as the basics of math, they're called the whole numbers, and in particular the so-called major whole numbers. Like, for example, if we take a look at the price action on the dollar against the Japanese yen, you know, symbol YUK for FX options, the action's taking place now around a very important whole number, which is 110 yen. And I look at these 1,000 pip ranges, Steve, between major whole numbers. And those major whole numbers would be the 100 yen level, the 110 yen level, 120 yen level, and the distance between these major whole numbers, for example, 100 and 110, would be measured in pips, you know, in a spot for FX rate.
Right. He's just joined us. That's great. Ilian, let me just interrupt. Raghee, hi, how are you?
I'm doing well. I apologize.
No problem. Let's just let Ilian finish his point, and then, you know, I definitely want you to join us, okay?
Sure, thanks. Enjoying it.
All right, great. Thank you.
Hi, Raghee. How are you?
Good, Ilian. I'm enjoying your talk very much. I'm sorry I couldn't chime in before, but please continue. Don't let me interrupt.
Oh, we're glad you were able to log in. So please feel free to add to, you know, the discussion at any time.
Thank you.
Raghee, one question, and maybe the first couple questions, if you have anything that's very relevant, such as software platforms or scanning, is there anything that you could add to that? I know that you weren't able to log in just a second ago.
Yeah, in terms of software platforms, I heard that, you know, that Wise Trade, I think anything like that will help do some of the heavy lifting in terms of the homework that Forex traders have across multiple markets is always going to be helpful. And then as far as, you know, my approach is usually utilizing the chart patterns in order to find those strikes that I feel are going to be positioning me well in the market. But please, Ilian, finish your statement there, and I'm eagerly anticipating the rest of your comment there.
Okay, thank you so much. So basically, I'm looking at these 1,000 pip ranges between these major whole numbers. An example that I was talking about is the distance of 1,000 pips between, for example, the dollar-yen exchange rate between 100 yen and 110 yen, and that's a 1,000 pip range. So I divide these 1,000 pip ranges into 4 equal parts, or 4 large quarters, as I call them in my quarters theory, of 250 pips. And hence, I basically get what I call the large quarter points. So into that 1,000 pip range, you're going to have the large quarter point between 100, 102.50, 105, 107.50, and 110 yen. You can see that that's the 1,000 pip range where the action and exchange rate between the dollar-yen has been basically fluctuating within for a number of months now. And just recently, the dollar against the yen, for example, attempted to make a transition into a brand new 1,000 pip range, this time above 110 yen, but that transition was not very successful, and we're already seeing some of the results of that in the last couple of days. The dollar is weakening a little bit against the Japanese yen. So that's just a little example of the basic premise of my quarters theory.
Exactly. I mean, one other point is, so it's sort of like your own Fibonacci's, if you will. I mean, I know there's a lot of ways to look at those numbers, but quarter points isn't just another analysis sort of like that. I mean, would that be meaningful, that relationship?
You could probably utilize it as such. To me, the biggest benefit is that these large quarter points, and perhaps I should mention about the main premise of my quarters theory, which is basically that I consider every significant move in the exchange rates between currencies to occur from one large quarter point to the next. So you would always have these constant, never-changing price points and levels that I found to be very reliable to my method, and you will always have a place where you can actually start from and a place in a particular price point that you could target in the next few days.
Interesting. All right, I'm going to pose the next question. And I found that, all my years of trading, this is always the $64 million question. How do you determine the trend and a possible reversal of the trend? Talking to a lot of other traders, it seemed like, some always like to sort of trade opposed to the trend. They're contra-trend traders. Some are looking for that big trend. Let me start with you, Raghee. How do you look at that trend and then the possibility that it may change?
I love the question, and thanks for it, because it's something that has been the backbone of my trading for, it's the question we all ask. And the tool that I use to do that, and I'm very specific about it because I think identifying a trend is not difficult as long as it's a few key things. One, I do it visually, and I think that if anyone wants to find a trend on any chart, I don't care if it's stocks, Forex, futures, whatever, it's psychology that we're tracking anyways. If you're looking for the trend, I lay up the 34 period, exponential, moving average, and yes, 34 is a Fibonacci-based moving average. I'm a big advocate of using Fibonacci numbers. It's a mathematical law of nature, so it's a 34 period on the high, on the low, and on the close. So what you're doing is actually putting up 3 individual moving averages based on that 34 period. So what I do then is I look at the angle at which it's traveling, and I'll determine the trend based upon how it's traveling in direction. If it's heading upwards, what I call 12 to 2, then I'll call it an uptrend. If it's heading down, 4 to 6, it's a downtrend. And when it's heading 3 o'clock, I'll call that no trend. And for our purposes here, it's that 3 o'clock that I'm most interested in, because that's when I'll start doing my option shopping, looking to purchase an option while the volatility is low.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.